This conference will now be recorded.
Hi, welcome one and all to this EduLoans webinar series, uh, which is being hosted by EduLoans. And we have with us Mr. Banit Singh. He's an education loan expert from EduLoans, who's going to be talking about the topic, which is US loan options. We would be recording this session, and towards the end of the presentation, we would be having a question and answer session. There is a chat box available in the towards the top right hand corner. You can feel free to put your questions in the chat box, which shall be answered by the speaker. So, and also in case if you have any questions, we would request please keep your systems on mute and ask them only in the chat box. So now we hand over the session to Mr. Banat Singh to take it forward, and he will be talking about the benefits of US loan options for the students who are going specifically to the United States of America.
Hi, welcome. Um, Screen. Okay. Certain technical glitches with when while doing it, guys. So this is about US loan options, and we're looking at a lot of students who are looking at US loan options. US loan options are typically for the students who have valid cosigners in the US. So this presentation will be looking at various aspects in terms of looking. The first one which we'll cover is what are the benefits of US banks. The second one we will cover is what is a valid cosigner. And then we will delve a bit more on the process involved. Now, the first part of it. What are the benefits of applying for US banks versus Indian banks? So we at EduLoans partner with many US banks through our US subsidiary, and we have banks like Sallie Mae, Ascent, Earnest with us, wherein we look to provide you loans through them. And apart from that, we have other banks like Citizens or Discover, which look at. Now, the first thing which comes to mind if you look at a US bank is the interest rate. So the interest rate is generally between 4 to 7%. In fact, I had a very recent interest rate at 2.9%. Obviously, the cosigner was very strong. But in general, this rate is at least 5 to 8% lower than the Indian banking rate. Second thing which happens, which is the benefit for US banks, is that there is no Forex conversion charges. So typically when you're looking at the US, the rupee to dollar and dollar to rupee conversion, which hits you, takes at least about a percentage or 2% each side. So there is a 2 to 3% reduction on Forex conversion charges. The US banks are absolutely free. Yes, absolutely free. There is no valuation, no legal charges, no processing fee involved. So it's very beneficial for students to look at this option from the cost perspective. Now come to it in terms of how much can they fund. Now here again, it is excellent. They fund up to the complete I-20 value. There is technically, you can get the whole value compared to say Indian banks who fund like 90% or 80%, or some of them do at 100%, or unsecured loan, they fund maximum up to say 40 lakhs, whereas your total cost of education is say 70, 80 lakhs. These guys will fund the entire amount. Completely unsecured, which means there is no property involved of your cosigner. It is completely complete amount can funded immediately using the I-20. Now the best and not the least. So in terms of fast loan process, it's completely online. So EduLoans actually strives to provide you the best loan for yourself based on three factors: eligibility, cost, and convenience. If you have an eligibility here, cost and convenience wise, there is US banks are the best options available. And this is what we would like to stress on compared to all other financial providers like nationalized banks, which take collaterals in, or NBFCs or private banks. They definitely, in terms of cost and convenience, are the best. Now, let's check the first aspect, the eligibility. Now, once you've ascertained that among the all four or five players in the Indian market for overseas education loans, they are the best available. What is the eligibility check requirement? First of all, you require a guarantor from the United States. A guarantor would be either a citizen of US or a green card holder. He may or may not be known to you, which means that it does not necessarily be had to be have your uncle or aunt. He can be your cousin, he can be a third party, as long as he is ready to stand as a guarantor. In terms of he should have a permanent address and phone number. That's the two things they require. Apart from this, they require details such as his entire history, his SSN social security number. They also require his complete 10 years, kind of 8 to 10 years of academic, his work experience. All of that is completely required. Apart from the guarantor who is indirectly guaranteeing your loan there, you generally require two contact points. One of them generally has to be a relative, and the other can be a family friend. This three people are required for most of the US banks applications. Some may require two, some may require only the guarantor, but if you have all three, it's the best. Now, what makes a good cosigner, and what does the interest rate depend on? So in the US, there are three major credit bureaus: TU, Equifax, and Equirin. Obviously, his credit rating score is important. It's anywhere between 350 to 800. That's what makes it important. For the credit history of the borrower has to be excellent. The credit history, the credit scores, and etc. have to be excellent. Now, what they calculate is income versus mortgage payments. So typically, how the banks think is, if they have $100,000 as income and only $20,000 as mortgage, so the free income is about $80,000. Based on this, the student or the eligibility, so based on his credit score, that means his intention or his previous history of repayment, and based on his income versus mortgage payments, which is the free cash flow, what they call as FOIR, fixed income obligation ratio. Two aspects, and the third thing is longevity of the amount or the loan or the working nature of the cosigner. These three things make a good cosigner. So typically, if you have the best cosigner, probably would be a middle-aged person around 45, 50 odd, who has about good 10 years of income left, and he has a very good income in the range of say 200K or 300K, around that range, and he would have probably have minimal or no mortgage payments, would be an ideal cosigner. Now, what are the formalities in the US banks loans? Um, let's leave the first one, visa formalities for US loans. Here, we do not want to delve on it, but uh, we do not recommend you looking at this as one of your visa options for US loans. We would generally request you to look at this option after you apply for visa, in terms of where it is. The typical thing being that sometimes the connectivity or the chances of migration to the visa officer increases when you look at a visa formality through an US loan. You can apply to various banks in various times. That's another thing which you would look at. So they have a soft credit check and a hard credit check. That's the US concept. In a soft credit check, your credit score does not happen. In a hard credit check, your US score takes in. Now, what happens in a hard credit check is, the US cosigner, the banks figure out that you're looking at a loan, and you would see that incremental applications, etc., would lead to increase in interest rate. So this concept exists and it should be carefully dealt with. So when you're applying for a loan, generally all applications should be done at the same time. That is the best way forward. In terms of what is the best bet in terms of the amount, this typically depends on actually the earning capacity of your cosigner. You can go for the complete amount or for a partial amount. Interest rates generally are consistent. However, sometimes I have seen in my experience they differ. So if you're looking at $70,000, maybe you had a 0.5% more than maybe if you're looking at $35,000. Permanent address and phone number is quite important. Usually SSN has it, and the banks track this immediately, and they look at the process. A student or sorry, a cosigner having a permanent address is important. Now, what do you look at in terms of application process? The application process only starts after you get an admit. The first question the banks ask you is which university, which, and based on the university, they look at the state. In the US, unlike in India, states individually issue a lending license, which means a lender has to get approved in all the 50 states of the US. Hence, it is important that they initially, if for example they do not have, lending license across US, it becomes tough for them. So the application process always starts after you have finalized your university. Another thing which happens is, looking at is the loan is generally approved for only 1 year. Many players in the market who do this generally insist that they can get you 2 year loan approval. I would say that's all crap, in the sense, because how the US functions is every year you file your returns. So generally returns are filed, from they have a Jan to December cycle. So every returns are filed in the month of December. Generally by March, the deadline for that is 31st of March. Once they are filed for 31st of March, your new credit score based on your income is assessed, and hence, every year there can be a change of interest rates. So for example, once your interest rates are fixed or variable, they remain consistent. But next year with the same cosigner you're applying for a loan again, you might not get the same rate. So in for US banks, you should always go year on year wise. So you will apply for year one. Next year you will apply for year two, and that's how the whole US bank or US banking industry functions. The tenure of the loan can be anywhere between 5%, 5 years, 10 years, 15 years. One lender does give to up to 20 years, but most of the lenders are between 5, 10, and 15. In terms of the interest rate, you generally figure out that the 5 year interest rate is the lowest, 10 year is higher, and 15 year is the highest. That is typically a concept called time value of money, wherein preceding or longer period of interest payments would lead to a higher interest, because the risk associated or uncertainty associated is higher. So uncertainty for the next 5 years is less compared to uncertainty for the next 10 years. So the concept, in terms of when we delve into the details, we can guide you accordingly. Another concept which comes into picture for the US bank loan is fixed versus variable interest rate. The variable interest rate generally depends on the LIBOR rate, which is London Interbank Offer Rate. It is the rate at which the dollar is lent between the banks, in terms. And what generally that signifies is that is the lending rate of the dollar with zero, kind of, zero, between or 100% repayment capacity, or zero risk. Actually, that's how it happens. When you look at, in terms of the rate, any variable rate, it is always an add-on percentage above the LIBOR rate. In terms of fixed, the bank has fixed a rate. No matter what the LIBOR happens, you will get a fixed rate. In general circumstances, looking at COVID-19, I would say variable rates are better right now, because obviously people have tanked the interest rates. Course, the Fed recently released a rate of 0.5% discount on it. So it was very good or excellent for people who are looking at it. So when we get these, so in my experience, when across years, which we have done over 100 loans in the last 2-3 years, generally variable rates are far better in terms of financial than fixed rates. And it is a case to case basis when they look at. Another concept which comes to mind is the repayment. Now, banks offer this repayment called deferred interest only or interest in principal. Deferred means that the entire money starts getting repaid during after you pass out from the course. Generally, they have a 5 to 6 months of a moratorium period. The interest only means that you generally pay the interest of the loan during the time of it. That generally comes to $150 or $200, and you start repaying the principal as you pass out. The interest and principal means that the complete amount is paid at that time from the starting time. Now, in our experience, when you select these repayment points, the interest only option comes out to be the best. It's the most cost convenient. In terms of interest, you would figure out that the deferred will be the highest interest. So it's say it's at about 7%. The interest only will be at say 6.5, and interest and principal say would be at 6. So most of the cases, or convenience wise, the interest only is the best because you can always take out about 150 to $200 odd every month on month. Okay. Then in terms of the application process for US banks, now we come to the final leg, how we have to do it. So all of you are requested to register on EduLoans portal or website, if not already done. Once you look at, there are two options available: paid and unpaid services. Usually what happens is the US banks track the MAC IDs of the cosigner, etc. So it becomes tough for you to have cosigner filling up. So the paid service is typically when you look to complete a service wherein the cosigner just gives us the details and we kind of complete his applications from our EduLoans office in the US. The unpaid services are one which where comparatively we kind of help you fill up the form and let the cosigner fill up his form, in the US. So that makes it easy for us. We process applications through all banks. Some of the preferred banks are Ascent, Sallie Mae, Earnest, Common Bond, etc. Here I would say Sallie Mae is like the SBI. They have over 60% market share for student loans. Ascent is the second, third largest, I guess, in terms of the market. Common Bond is the latest entrance, has done over $1 billion worth of loans. So all these are very, very credible players. So we'll apply to 3 4 of them, look at what kind of interest rates pop up, and then we decide on how we can look at. Now, in terms of how we go about is looking at this process wherein things which I discussed in the last slide about interest rates, about various things such as variable, about repayment period, about say about the repayment style or deferred, etc. All of them pay. So once you have decided the interest rates, you select everything, you sign what is called the loan agreement in this case. And once you sign the loan agreement, etc., it's all online or digital. Once you sign in, then the US banks send your university an email confirming that you are a bona fide student. Once the university has confirmed that that you are a bona fide student, the money is remitted directly to the university. So the money never gets into your hands. Your living plus tuition is remitted directly into the university. Now, once the money is remitted to the university will give back your the money, living expenses, and hence you would be able to finance your complete education. So that is the process completely end to end. It's quite simple, quite straightforward. The application process can be done within a week, depends on how fast your cosigner responds, and that's where we are. Very plain and simple in terms of what we have. We are open to question answers. I can see a few, and I would probably for the benefit of everybody, let's read it out and then I'll address them one by one.
So we
Hello.
we thank Mr. Banit Singh for taking such a wonderful session. I hope you all would have got to know a lot about the US loan options with the banks in the US. So now we are open for a question and answer session where you can feel free to post your questions in the chat box. So we will be answering those questions for you. And in case if you have any further questions after the session, you can feel free to call our loan officers, loan counselors on the numbers that are flashing on your screen. We are also recording this session, so you can feel free to view this session, which will be uploaded onto our portal in the next 2 to 3 days. So we will take the first question, which has come from Sai. And the question is, if the credit history of the guarantor is low, can an additional guarantor be added?
Well, I would say here, why don't you put the additional guarantor as the main guarantor in the loan product? Usually, all banks only look at one guarantor, or you have to change your application if there has to be another guarantor. So in this case, I would recommend that the additional guarantor, etc., would be a good option for you to add. In all cases, banks do not accept an additional guarantor while applying for a US bank loan.
The next question we have is from Monit, and it is if we want to meet you to discuss more, when is that possible?
Um, Unfortunately, or fortunately, we are only located in Mumbai. The EduLoans team is located in Mumbai, and we are most open all 6 days a week. And you can reach us in any of the numbers below, and you can look at our appointment as soon as you worst. The ideal process is looking at registering on our platform, and once you are registered on the platform, anybody from our team will give you a call, and once you get the call, and they will connect you, and adequately we will address all your queries.
The next question is from Farheen, who wants to ask, does age matter for a US loan cosigner?
Age actually does not matter for US cosigner, but what happens is if the US cosigner is say retired, then he has no live income. So it that is one issue which you have in terms of looking at the age aspect. Generally, the age is not the criteria, but the income of the person is the criteria in case of cosigner.
The next question is that if the person is above the age of 60, can he be a cosigner? I somehow feel that it's the same question that has just been answered.
Generally, the US accepts generally people at the age of 21 plus as the cosigner. I would say one or two may accept 18 plus, but 16 definitely will not look at, because 16 he hasn't even started earning.
So Kshitij has a question. If the whole money for 1 year is directly transferred to the college, won't that start fetching interest on the whole amount from the start?
Kshitij, so what happens is the whole amount is not transferred. The 1 year money is sanctioned and it is transferred semester wise. So you do not lose on any kind of interest rate. So the sanctioning is for 1 year. However, the disbursement is as per the schedule provided by the school. And that is either could be tried 2 semesters or 3 semesters, however the course is structured.
So we'll wait for a few more questions to be asked. I'm sure most of your doubts would have got cleared when the presenter has taken you through the presentation, but we are still open to your questions so that we can provide you answers at this point of time. And in case after the session, if you have any further questions, our loan counselors are always available on the numbers that are flashing on your screen. So Monit Monit has another question. If the living expense is also transferred to the university, is it compulsory to stay on campus?
It's not compulsory to stay on campus. So even if the money is transferred to the university, you can always ask the university financial office to refund the money back. And once you've refunded the money, or it's in your bank account, you can use it to pay. You stay on campus or off campus. So that is not compulsory to stay on campus.
We'll just take a couple of more questions and then we shall call it a session. So there's a question that's come up from Kshitij. He wants to know also, do we need to renew the loan application after the first year of studies since it's only for 1 year?
So generally what happens is your account is already created. However, you would have to have a new loan application submitted in year two because it's only for year one. So, and hence, although say most of the information is already with the bank, but yes, a new application will have to go through.
Hope that answers your question, Kshitij. You can ask any more questions if you have, please. So we're waiting for just one or maybe two last questions to be answered. If you have any, we can certainly answer those for you. So Monet has a question. If we complete the course in 1.5 years, then will the entire duration of second year?
Moneth, in the US, what happens is you work credit wise. The universities charge you credit wise. So 36 credits are required for masters. You can choose credits 3, 4, or 5 credits per semester. So when the pricing of the course happens, it is happening credit wise. So if you complete it in 1.5 year or 2 years, it is immaterial because the I-20 value is is the number credit is an amount per credit multiplied by the number of credits plus your living expenses. So the credit components do not differ. Yes, however, the living component does differ. In terms. So when your college is scheduling or calling for the funds, if you have applied for 5 credits, they will request for a 5 credit transfer. So the schedule is maintained by your school, generally in collaboration with you. So you kind of handhold them, and hence the concept of if you complete within 1.5 year or 2 years is immaterial, because the complete course fee has to be paid whether you do the course in a year and a half or two.
The next question is coming up. It has already arrived here. So it's from Chitij. Will sharing SSN be good for the guarantor, as it is not something to be shared, I think. Maybe I'm wrong.
Hi. So, Shita, yes, social security number is a very, very confidential and sacrosanct number, and people are very reluctant to share it. Hence, we advise directly that once we have filled in your application, you can look to fill in the application directly. Your cosigner can look to put in your SSN directly to the bank. However, in case he is very busy and unable to do the needful, if in case social security number is given to us, we completely provide data secrecy, and we have non-disclosure agreements, and this SSN number shall not be disclosed to anybody across, even in different RMs in the same organization. So whosoever is handling your case, he or she will only know the SSN, and he or she will only apply to the banks. So very strict decorum in terms of confidentiality is maintained. Yes, and in terms of SSN, you are right, it is comparatively a confidential number, and people are reluctant to share across with third party.
So as Banit sir said that it's not a risk with you sharing it with the EduLoans team, and we maintain utmost security. So we have a question from Monit. Will the guarantor face any problem if he wants to take another loan during the duration of my loan?
So the guarantor would have no problem if he wants to take a loan from, say, an alternate loan during the time of your loan. However, what is going to happen is this will show on his SSN, so it will show in the debit side wherein so his maybe the drawing capacity or his loan capacity will get increased. So when the cosigner signs the loan, it does show on his debit. So for example, if he has already has a 300,000 loan against him and you are taking another 70,000, so then his total outstanding becomes 370,000, which might affect his future loan only for the interest rate, or that also if at all if he's above his drawing capacity as per his income. So as far as the cosigner, he can choose to take any other loan during your loan, and he is not binded by the loan at all.
We'll just take one last question. So please feel free to ask that question so that we can call it a day. So Kshitij has another question here. Suppose we need to take a loan for visa now. Do we need to cancel the loan first before taking loan from US bank? I'll just repeat the question once again. So Kshitij has a question. Suppose we need to take a loan for visa now. Do we need to cancel that loan first before taking loan from US bank?
You would not require to cancel the loan here, which you have taken before taking from US bank, because the US bank is a different completely entity and not governed by RBI. So in terms of education loan, yes, if you look at education loan, you can only take them from one player for the financial providers who are governed by Reserve Bank of India. If they are not governed by Reserve Bank of India, you can take from multiple parties. So that you don't necessarily need to close the loan to take the new loan.
I hope that answers most of your questions. And for any further questions, please feel free to call us on the numbers that are on the screen. We thank Mr. Banit Singh for taking such a wonderful session today. And of course, we thank all of you people, our students who've taken out the time today to be a part of the session. We are conducting these webinar series every Friday. Unfortunately, we were not able to do it yesterday, so we've managed to take it today being a Saturday. But in the coming weeks, we are going to have these webinar series conducted along with our other financial institutions. So next week, we are having a session which is going to be conducted by one of our financial institution by the name of Incred, who is an NBFC. Most probably, the session will be next Friday between 7 p.m. to 7:30 p.m. We will be sending out a communication via email so that you all can register for that session as well. And we are going to be uploading the recording of this session on our portal, which you can feel free to view after tomorrow. So thank you so much, one and all, for being a part of this session. We once again thank Mr. Banat Singh, and we'll just take last words from Mr. Banat Singh before ending the session today.
Okay, guys. So I believe we've kind of elaborated on U.S. loans, and they are a very viable option provided you have somebody who can co-sign a loan in the U.S. And in terms of application charges, in terms of cost, convenience, once the eligibility is through, I think it's the best one which we have in the system. And we at EduLoans can help you with all financial issues across and all kind of financial products. And that's the genesis why we started education loans, because we thought that students were not able to get a single platform for all educational product and the right guidance. And hence, we've brought in US banks, and we're one of the only players in the Indian market who is working with US banks and giving you these options for your benefit. So I hope it was a good session and look forward to hear from you. And I'm available on the phone numbers below, as well as I'm available through the EduLoans team as well. If anybody links into us, we're all interconnected. So we can get back to you with and hope to answer all your queries. Thank you.
Thank you, everyone. We now call this a session, and you all have a wonderful evening and a wonderful day. Bye for now.